India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. You know, yesterday, same time, I was saying how it was looking like not the retreat of monsoon, but the onset of monsoon. I mean, last night it kind of gave you, for those of you who've seen the September 26th, it was, I think, 2004 or 5. I mean, it kind of gave you those
July
vibes.
26th.
July 26th.
July 26th, 2005.
These are visuals from last night, and we were just discussing before we hit air about how maybe a colleague, Nigel was telling us how a colleague maybe reached early this morning.
Indeed.
So, crazy scenes out there, and just sort of hoping that all of you are safe as you watch this broadcast.
Yeah, absolutely. And this one took Mumbaikars by surprise. We're not used to seeing this level of rainfall and waterlogging and traffic chaos, but the good thing is actually the red alert was on till today morning. Schools have been shut, but it's holding up for now. So hopefully it's going to be, back to business soon enough.
Well, indeed, it was a difficult evening for a lot of people yesterday. You know, the cabs, auto rickshaws, trains, everything. Transportation came to a standstill. And I think yesterday, if you were actually stuck somewhere, if you just stayed indoors, it would have been better. But that's hindsight. Authorities have taken the call, I think, wisely. They took the call last night itself to shut schools and said, just stay safe today. So, guys, just stay safe. Focus on the television. We're going to get you all the updates with regard to today's market action.
And as they shut schools, no rain today.
Absolutely clear, so far.
Can't blame them, right? I mean, it looked pretty bad, and you had to sort of take a call on what things would look like today. Let's rewind the clock back and tell you what you need to know as we begin today's session. U.S. equities, absolutely quiet. We'll begin there because yesterday we had a pop, and I'll get to that pop in just a bit. But, the market last night pared back. Actually, equities pared back. Dow was down about 3/4. The S&P was down about 0.2%. NASDAQ was flat. Russell was down about 1.25. So it was more down than up in that sense. Yields, they went up about 5 basis points. We're back at about nearly 3.8%. The one sort of macro market which had a decent move was the dollar index, which basically had almost its best day in the last 1 month. It went up 0.7%. We're back at about 101. It did briefly break the support zone. 100.5 to 100.8 is that support zone, which is a 20 weekly moving average. A bunch of lows from 2023. It broke through that support briefly, and then now we've seen a decent bounce. Oil prices 2% lower. We're at about 73.57. We were 75 as we were starting, the same program yesterday. Gold prices continue to move higher. That's made a new, fresh all-time high. The question is, does it have more steam? So far, most of this has been led by Chinese retail buying. I mean, India is, of course, a big demand driver as well, but very little by way of Western demand. So we'll see, how much this has got to go. Later tonight, out of the U.S., you've got lots of Fed sort of speakers who'll weigh in. Actually, it's, I think, about 4 or 5 Fed speakers and voters will speak, and you have some macro data, durable goods, personal consumption, GDP, et cetera. So just to circle back the levels, we've got the Nifty, which closed slightly above the 26,000 level. And it was the definition of a 3 p.m. move yesterday. Exactly at 3, the market started rallying and we went up 90 points from that 3 p.m. to the day's high. And then, of course, we came up a little bit towards close, but 0.25% up on the Nifty. We need to, frankly, at this point, I'm not very clear if this is a fresh move higher or if this is just the market which is starting to mature a little bit. How will we know? You got to basically, the index needs to cross above the 26,245 level and sustain above it. It's some distance away from where we left off yesterday, but it's got to do that. I think that will decide whether this is kind of stretching even more or we're at a point where perhaps there is some consolidatory, even some pullback, which is around the corner. A negative daily close, I think, will be also one of the indicators. Supports, by the way, in terms of levels, stands at 25,763, which is the 40-hourly average. Nifty Bank needs to break above the high of 54,247. And here supports come in at the 40-hourly level, which changes, but I mean, it's been the hourly average support. 53,566 is that particular number. GIFT Nifty should indicate what the start is looking like as we kick things off. It's another 70 points higher. So 26, close to 26,160 or so is where the start is looking like, with about 55 minutes to go for the pre-open session. Surabhi.
And the reason why the GIFT Nifty is showing such a bright shade of green is because Asia is actually looking very, very good right now.
Yeah.
Most of the markets are rallying. I mean, Japan's up about 2.5% actually. And China, it's continuing its party from, of course, the time that the PBOC announced its measures. So that's the Hong Kong market up another 1.5%. I mean, Taiwan, Japan, you name it, all those markets are rallying. By the way, the Chinese market was on a 5-day winning streak, the mainland China market, if you take the CSI 100 as a barometer, the CSI 300 as a barometer. And that's only extending today. So good news coming in across Asia and no concerns whatsoever from the neighborhood markets. But if we talk about sort of the moves here, the fund flow picture yesterday, we hit this 26,000 mark. The market did nothing. Then we had a late surge. We hit it and we closed just around it. But there is volatility that's creeping into the market. So let's keep that in mind. On the fund flow picture, the FII figure was a sell figure, actually. They sold stock worth about 1,000 crores in the cash market. Domestic institutions were buyers of about 1,800 crores worth of equity. On FIs, by the way, something interesting. SEBI yesterday said that they will be setting up a foreign portfolio investor outreach cell. It's a bit of a mouthful. Basically, an FPI outreach cell. The aim is to have more direct engagement with FPIs and to ensure that any of their issues with respect to setting up shop here in India and market access, all of them can be addressed in a more seamless fashion. Remember, some of the foreign participants like Chris Wood of Jefferies have been making this point that coming in, registering and just starting business here in India is very, very difficult, which is why some FPIs stay away. That's one view. Anyway, we've seen the regulator make a couple of moves and steps in order of easing that process. Quickly moving on, today on the bond market side, let's watch out for bond yields and the action there because the second half borrowing calendar is going to be announced. Remember, the gross borrowing for the year was about 14.1. As we end September, the government is expected to finish off about 7.5 lakh crores worth of borrowing. So a lesser amount remaining for the second half. We'll have exact figures when that announcement is made. And of course, the bond market has been rejoicing and rallying, bond prices hitting highs not seen in the last 32 months. And the yield has been cooling off on anticipation of rate cuts eventually from the RBI and of course more foreign money coming into the bond market. Moving on to some individual stock names, whenever there is any sort of, business diversification, that always catches my eye. And PB Fintech is one such stock, and we'll talk about it because we are picking up from sources that they could be getting into healthcare and they could be setting up hospitals. So not entirely unrelated, but yes, it's a very different business than what they're engaged in right now. So watch out for that. And by the way, speaking of policy, Karnataka is looking at an EV policy for the next 5 years, and they could be offering a lot of incentives, including exemption on road tax for vehicles, EV vehicles, which are below 25 lakh rupees in value. So let's see if that causes a flutter on Ola Electric or, all the others as well in the EV ecosystem. So plenty to keep us busy. But the question is, can the bulls sustain this move above 26,000?
Well, that's right. And yesterday we had that late flurry because the Nifty Bank, that's the one that played out the weekly expiry. It played out the monthly contract expiry as well. And that was the reason that we did see a big pullback in the last 1 hour or so. So it's a technical factor, so to call it, that led that index higher. And looking at the rolls, the rollovers for the futures contracts, well, it's relatively low in comparison to what we saw in the previous contract. So that's why the total open interest on the Nifty Bank is relatively lower. When we got into the September series, it was much higher, which was a bullish indication. So let's see how that goes. Well, in terms of the global tailwind, as you mentioned, the dollar index is weakish, still holding below that 101 odd mark. You have Brent crude prices cooled off as well. And that's a tailwind from an India economic as well as macro perspective. And that's something that will hold us in good stead. Moving to the FI positioning, well, they continue to remain net long, 75% of the positions on the long side and 25% on the short side. And as we've been making this point, the FIs and the clients, they're on opposite ends of the spectrum. FIs net long, clients net short, and that number has been more or less constant. But the India VIX, that perked up for a couple of sessions and that's cooled off. And that's normally a bullish sign. You don't want to see the VIX run away beyond the 15-16 odd mark. Yesterday as well, it cooled off by close to around 5%. Now, today we'll have the expiry that will play out for the Nifty. And there is some call writing that we have seen. 26,050, 26,100 call. Both of them have seen a fair bit of open interest build up. And the bears believe they can defend higher levels. But the good news is on the downside, we have been seeing writing at around this 25,900 put. Which brings us to the levels. The bears will get a little bit fearful once we get past the 26,100, 26,150 odd mark. So this is the crucial resistance zone just for the day. But the reference points on the downside comes up for you on the screen. The options data suggests that. And yesterday as well, we went closer to around these levels. So that's the important level to track. On the Nifty Bank, you wanted to get past the recent high and hold above that level. While the reference point comes in a little bit lower at around this 53,700, which is a support on the downside itself. The stock that I'm tracking today is 5-star. Yesterday we've broken that exclusive that there's a possibility that could be a large trade that takes place. So that large trade gets out of the way. I want to see what happens post that. Because if you look at the valuations and you compare, say, a 5-star with SBFC, well, on a price-to-book multiple, it appears it's more or less similar to what we have on SBFC. But otherwise, the return ratios are much more favorable for 5-star in comparison to SBFC. And DAM Capital, they have put out a note. They believe that there is a good scope for re-rating for 5-star from year on. Post this block deal, I'll be keeping a close eye on this stock. So let's see how that goes.
Okay, all right. Got that. Nigel, thanks very much. So we'll keep an eye out specifically on some of those stocks as well. There's, of course, a lot to cover as we go forward. And, of course, plenty of stocks to talk about as well. But we'll kick it off with the equity call of the morning. Lawrence Belanco of CLSA says that global markets have seen further follow-through action following last week's breakout. In the US, he says the cyclical versus defensive ratio has broken out of its August to September basing pattern. The consumer discretionary versus staples ratio is within striking distance of the mid-July highs. And the investment grade corporate bond ETF versus the US 7 to 10-year Treasury bond ETF has broken out to new highs. He says this is a constructive backdrop.
Okay, well, that is the move which is coming in. And now Lawrence also says that while we have no new momentum signals for the Nifty's breakout to new highs from a behavioral aspect, the index continues to respect supports provided by the 50-day moving average post the election volatility back in June. He says as such he would keep it simple and give the benefit of doubt to the upside and the continuation of the current uptrend as long as price action continues to respect supports provided by the rising 50-day and of course which currently stands at 24,921 levels.